dissect our own markets, chat levels with CA Rudramurthy as well as Kunal Bothra who are joining in. Kunal, let me begin with you. Broad gains, all the sectors were up and away. How are you looking at the overall trade setup given that it's been a lot of those high beta names like PSUs and metals that are at the forefront of this rally?
Good morning, Aman. So I think there's been good recovery for the indices over the last couple of days. But when I look at this in the context of the previous recoveries, we're not being able to surpass the 50% of the entire correction for the index so far, which means that there's a definite lack of strength in the index movements as such. The sector movements as well as the market internals have started to shape up, quite okay. Yesterday we saw a good mix of large caps and mid caps emerging quite well. There were a lot many stocks which were seeing a strong follow through up move, and I think that was more of a comforting sign, because when you have stocks seeing a follow through up move, we expect the trend to continue for many of the individual stocks and sectors over the near to medium term, and that offers a lot of trading opportunities. The market breadth has opened up quite well. That's another positive for the indices. But the fact that we are unable to break past about 24,500 short resistance point, I think that makes the near term scenario a lot more I would say consolidative as such. We are looking at a 500 to 600 point trading range for the index before any kind of a major global cues emerge, which could lead the direction for the indices.
Right. Rudra, hi, morning. Well, rebound yesterday for sure, but seems like looking at the global cues, we're going to peg back once again. What are the levels you're monitoring on the index and the Nifty Bank?
Yeah, very good morning. First of all, for me, yesterday's recovery was better than that of day before. In fact, yesterday we closed at the highs of the day, whereas day before it was other way around, where we closed at the lows of the day. But again, seeing the global cues and the gap down open today in SGX, I'm clear that Nifty is in a range of 24,000 to 24,400, 450. And Bank Nifty, if you see, again, the range is around 49,800 to 50,800. So this is a time-wise consolidation right now. Now we don't know whether the break will happen on the downside or on the upside. So it is better for we to wait for market to confirm what it has to do. Until then, be very sector and stock specific. But relatively, definitely Bank Nifty is more weaker than compared to that of Nifty. And yesterday I could see some signs of recovery. But then seeing today's SGX and the clues what you get from global market, better to wait out for Nifty to break that levels of around 24,400 at least, see a close about 24,400 and then conclude that yes, the down move is over. Till then, I'll be sector and stock specific in this market.